Let me again welcome you to MedZone African Motives. We are still on EMS Grade 8, Term 3. So we are on the notes of EMS, Grade 8, Term 3. So our chapter is still entrepreneurship. So now we are on lesson 4 of our chapter, entrepreneurship. So without wasting much time, let's quickly go to um, the topic of the day. So here we are going to talk about companies as a form of business ownership. Remember our previous presentation, we did close corporation, we did partnership, we also did sole trader or sole proprietorship. So in today's presentation, we are on companies. Companies. So as it says, companies sell shares to private individuals or to public to generate income. To generate income. It means companies raise money by selling shares. It means that companies raise money by selling shares. By selling shares. So people who buy these shares invest money in a company. For example, a company sells, let's say, 1,000 shares to investors to raise how much? To raise 500,000 for expansion. So that is what you say. Also, it further on says the owners of companies are called shareholders. Owners of the companies are called shareholders. So the members of companies are called shareholders. So people who own shares in a company are called shareholders. So these shareholders are people who own shares. People who own shares. So these are people who own shares. These are people who own shares. They are called shareholders because they are shareholders because they own a portion of the company. They are called shareholders because they own portion of what? Of the company. For example, we find that I buy shares in a company and become a shareholder. That is what we're saying. They are called what? Shareholders. Companies need to be registered with CIPC, Companies and Intellectual Property Commission, CIPC. So before operating legally, a company must be registered with CIPC. So that is that. Before they can operate, they must make sure that they register with CIPC. So that is that. Notice of incorporation, it is a document to register a company. That is one of the characteristics. Notice of incorporation, not characteristics, but that is one of the how we can say a company is all about. Notice of what? Notice of corporation. So notice of corporation, this is the official document. This notice of incorporation. This is a official document. It's official, a document used to register company. This document is used to register company. To register company. Is used to register company and bring into existence. That is that. So it's used for that. For example, the founder submit a notice of incorporation when forming a new company. So for the company to exist, this document is very important. Memorandum of Incorporation, that is MOI, MOI, document stating the rights, duties, responsibility of shareholders. That is that. So Memorandum of Incorporation, that is, like we've said, is a document. This document, you find that it explains the rights, duties, responsibilities of shareholders, directors, as well as the company. So it states how the rights are allocated among shareholders. Prospectus. Invite the public to buy shares in a public company. So that is that. So a prospectus is a document used by a public company to invite the public to buy shares and provide information about company. So a public company issues prospectus before listing its shares for sale. So that is what they issue, the prospectus. Where we know the prospectus is a document used by a public company to invite public to buy shares. Profits are called dividends. Profits are called dividends. When a company makes profit and distributes some of them to shareholders, these payments are called what? Dividends. So that is that. The profits of company, they are called dividends. So that is that. So now let us move on to characteristics now. Characteristics of public as well as of private company. Characteristics of private as well as of public company. So now let us start with private company. It says in a private company, the name ends with LTD, PTY Ltd, Proprietary Limited. So a private company's name must end with PT Ltd. So you can say Sunrise Traders PT Ltd. So that is how we know proper private company by. Shareholders is 1 up to 50. That is the formation of this. So a private company can have between 1 and 50 shareholders. So that is that. So then it says limited liability for debts. Limited liability for debts. Shareholders are only liable for amount they invested. So if the company owes money, shareholders usually do not lose personal assets. That's what we always talk about. Now let us let me see. Still under a private company, unlimited continuity. Unlimited continuity. The company continues to exist even if shareholders leave or die. So even if one member can die, the company is still going to continue. That is why we say it has what? Unlimited continuity. So that is that. They have unlimited continuity. Hope you get that. Hope you get that. So the company continues operating after a shareholder passes away. That is that. Legal person. Legal person. So the company is separate legal entity from its owners. So the company signs a lease agreement in its own name. So that is that. That is what we say is a legal person. Business pays tax. Business pays tax. The business pays corporate tax on its profit. Managed by one director. A private company can be managed by one director. It can be managed by a one director. That is that. Shares are not listed on JSE. The shares of on private company, they are not listed on J and JSE, Johannesburg Security Exchange. So they are not, shares are not listed on Johannesburg Security Exchange. So that is that. They cannot be sold on JSE. That is that. So that is that. Johannesburg Stock Exchange do not publish financial statements. So also they do not publish their financial statements. So that is that. So now coming to what you call public company. Public company, the name for public company must end with LTD. That's how we are going to know that this is a public company. It's LTD, limited. Shareholders is one. So it's one and then you don't have maximum. So it has no maximum. It's from one to many of who want to join the public company. Limited liability. Limited liability, same as private company. It means it is a it is separate from the owners. So it is what? Limited liability. So it means that shareholders are only liable for amount they've invested. So in the case where the company owes money to shareholders, if the company owes money, shareholders usually do not lose personal assets. So that's what we always say. Unlimited continuity. If one member can die or leave the company, retires, but the company is still gonna continue. The company is still gonna continue. Also, it's a legal person, like I've said, it is separate legal entity from its owners. So that is that. Business pay tax. So business pay tax, that is that the company, we know they pay tax on its profits. This one is not managed by one person, but it is managed by three. It's managed by how many? Three. Managed by three directors. Public company must have at least three directors. A board consisting of chairperson, two other directors manage the company. Shares are listed on Johannesburg Stock Exchange. Shares can be bought and sold on Johannesburg Stock Exchange. That is that. Published financial statements. So unlike private, public do publish financial statement. So financial information must be made available or to shareholders and the public. So these are the example of the public company, Eskom, Telecom, Sasol, SAA, and etc. But for private company, talk of Pick and Pay, Checker, Shoprite, MTN, CLC, and etc. So that this is the end of this presentation. Thank you very much.